Hey, what's up, everybody? It is Thursday, August 27th. How's everyone doing? Listen, Powell, oh boy, that guy, he just sometimes makes me laugh. He spoke today at Jackson Hole. Everybody was waiting for his speech, all the zombies ready to, buy, sell, do something on his words. And so Powell basically came out and said, hey, you know what? The Fed has decided there's no more Phillips curve. It's about time they figured that one out. The Phillips curve means that, when a lot of people are working, that drives up inflation. That relationship has been shown not to exist now for decades. I mean, everybody kind of knows that. The Fed just caught on to it. So the Powell says, we're going to let inflation run hotter. Fine. Problem is, how are they intending to do that? Now, here's where they got everything backwards. Because in central bankers' minds, they think keeping interest rates low stokes inflation. Well, if that were the case, we would be seeing hyperinflation in Japan by now, because they've been doing, decades of low, zero, and now even negative interest rates, and they keep saying the same thing month after month. Oh, we can't get the inflation rate up. We can't get the inflation rate up. It's the old saying of Albert Einstein, insanity is doing the same thing over and over again and expecting a different result. So this is clear central banker thinking. Now, they can raise inflation if they raise interest rates, because as I have said many times, and it is a proven thing, that rate adjustments are price adjustments. The cost of credit is reflected in the cost of all goods and services. So if you raise interest rates, that raises the general price level, all else equal, all right? So it didn't surprise me at all when the zombies jumped in, they sold the dollar, they bought gold, and all that stuff reversed very quickly after that, because the Fed staying at zero for a prolonged length of time actually mitigates inflation. It works against inflation. It is like deflationary. Now, that's one component to inflation. We also have this massive fiscal expansion going on, and that is working to raise the price level in a kind of a lumpy fashion. It is not like a broad-based inflation, but we're starting to see that perk up in certain materials and stuff like that. So you have that going on, but the Fed thinking that it's going to stoke inflation or push it up higher because it's going to keep interest rates at zero, I mean, they got that all wrong. That is all wrong. So, but not surprising, because that is very common central bank thinking. That's what they all think. So that's what happened today. Anyway, nothing has changed with respect to the fiscal situation. I do see a little bit of a plateauing in the rate of growth of spending. Now, spending year over year is still making new records every single day, but the rate of growth has plateaued, and I would say that plateau has been in place since about August 10th. All right, so it's not accelerating anymore. It's kind of flattening out, but it's flattening out at a very high rate, about 37% year over year growth. That's a lot. And we're at 1.7 trillion above where we were last year. So we're around, 6.3, 6.4 trillion in total spending. It's enormous. It's gigantic. And I've been saying this over and over. Those flows just continue to go into the economy. They really end up with these big mega cap corporations that have, a very large impact on the stock market. They're dragging up the market averages, yada, yada. I've said this over and over for weeks now. So Powell made his comments today. It was an easy zombie trade, by the way. If you're into like short-term trades like that, and if you really want to pick their pockets, sometimes it's really, really easy because you knew they were going to sell the dollar, they were going to buy gold, and all that stuff was going to reverse. But the dollar's trend, the longer-term trend, is still a downtrend. All right, when the dollar ran up today, first it went down on Powell's comments, then it went up. When it went up, I sold some more, and then it came drifting back down, and those are profitable trades. Same thing with gold. You got to buy the pullback. You got to buy the pullback. So yeah, that's where we are. The Dow was up strong today. NASDAQ was down. S&P was up. The Dow now has recovered all of the loss from since the pandemic. It has not made a new record high yet, but I believe it is on track to do so. And yeah, we saw the AAII survey again. It's still a low level of bulls on the part of individual investors. It creeped up a little tiny bit, but still below the historical average. And that's been the case now for 27 weeks. 27 weeks. More than 6 months. Incredible. Incredible. And I looked at the put-call ratio yesterday. Actually, the 20-day average of the put-call ratio. I went all the way back for 14 years. I could not find a level as low as it is right now. So a low put-call average would be an extreme level of bullishness. And there we go again with that dichotomy between the put-call ratio and the AAII weekly sentiment numbers. But that's been the case for a long time. That's been the case for a long time. Anyway, all this stuff is in my emails and my report. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. There's nobody out there who does what I do. This is taking the concepts and understandings of MMT and applying them to trading and investing. Nobody does this. Nobody has this insight on policy and MMT and the markets. If you want to go with all that mainstream Wall Street crap and research, that's fine, you can. But if you want to have a real understanding and, kind of a grasp of the big picture, you got to come to me. All right, everybody. See you tomorrow. Bye-bye.